Today, we're diving into an exciting comparison between two titans on the stock market world, NASDAQ and the Toronto Stock Exchange, TSX. In other words, we're about to embark on a journey throughout the heart of the North American finance. But before we dive in, the opinions and information I'm sharing today are my own, based on public sources and my personal research. This video is for educational purposes only and isn't meant to replace professional financial advice. Alright, now that we got that out of the way, let's get into the exciting video. Let's start with NASDAQ. Now, you might be wondering, what exactly is NASDAQ? Well, it's not just a fancy acronym. NASDAQ stands for the National Association of Securities Dealers and Automated Quotations. It's the second largest stock exchange in the world, right behind the New York Stock Exchange. But here is where it gets interesting. NASDAQ was a pioneer in electronic trading. Imagine this, it's 1971. And while most people are grooving to the latest Beatles album, the financial world is about to be revolutionized. NASDAQ burst onto the scene of the world's first electronic stock market. No more shouting traders on the floor, just the quiet of the computers making trades at lightning speed. Now, let's hop across the border to Canada and talk about the Toronto Stock Exchange, or TSX, as it's affectionately known. The TSX might not be as big as the NASDAQ, but it's got some serious clout. According to Investopedia, it's the largest stock exchange in Canada and the third largest in North America. Not so shabby, huh? But here's where it gets really interesting. The TSX has a fascinating history that goes back to 1861. That's right. While the American Civil War was raging, Canadians were setting up their first stock exchange with a whopping 18 stock listings. Talk about starting small. Now you might be thinking, okay, but how do these two stock market heavyweights stack up against each other? Great question. Let's break it down. So let's compare tech versus resources. The NASDAQ is famous for being the home of big tech companies. We are talking Apple, Microsoft, Google, the tech giants that shape our digital world. The TSX, on the other hand, is well known for its strength in natural resources, is the go-to place for energy and mining companies. Now, let's talk about the trading hours. Both exchanges operate during similar hours, but there's a twist. The TSX opened for regular trading from 9:30 a.m. to 4 p.m. Eastern Time. NASDAQ follows a similar schedule, but it also has a pre-market session from 4 a.m. to 9:30 a.m. and after-hour sessions from 4 p.m. to 8 p.m. So if you're a night owl or an early bird, NASDAQ might be more your speed. Now, let's talk about the currency. Here's a key difference. The TSX trades in Canadian dollars, while NASDAQ trades in US dollars. This might not seem like a big deal, but for investors, it can make a huge difference when it comes to currency exchange rates, obviously. Let's talk about the listing requirements. NASDAQ is known for having a stricter listing requirement compared to the TSX. This means it might be tougher for a company to get listed on NASDAQ. But it also means that company listed there might be seen as more stable or established. But there's something really cool. Many Canadian companies are actually listed on both the TSX and the NASDAQ. It's like they are playing for both teams. These cross listings allow these companies to access a wider pool of investors and potentially increase their stock liquidity. Now you might be wondering, as a Canadian investor, should I stick to the TSX or venture into NASDAQ? Well, according to a discussion I found on Reddit, there are pros and cons on both. Buying on the TSX can save you conversion fees, but investing in NASDAQ gives you access to those big tech companies that have been driving a lot of market growth. One Redditor pointed out that if you're investing through an RSP, that's a registered retirement savings plan for our non-Canadian friends, you can buy US stock without worrying about additional tax implications. But if you're using a TFSA, tax-free savings account or non-registered account, you may have to deal with withholding taxes on dividends from U.S. stocks. And there you have it. NASDAQ and the TSX, two powerhouses of the North American stock market, each with its own strengths and quirks. Whether you are into tech giants or resources companies, whether you prefer loonies or greenbacks, there's a world of investment opportunities out there. Remember, the stock market is always changing, so what's true today might be different tomorrow. That's what makes it so exciting. But wait, there's more. Just when you thought we were done, we are about to take an even deeper dive into the thrilling world of the stock market performance. You see, while we're covering the basics, there's a whole treasure trove of data waiting to be explored. Let's kick things off with NASDAQ. Now, I've been poring over this incredible 40 years historical chart from macro trends, and let me tell you, it's like a roller coaster ride through financial history. Picture this. It's 1971, and NASDAQ is just getting started. Fast forward to 2000, we see the index hit a mind-blowing peak during the dot-com boom. The NASDAQ composite reached an average closing price of $3,783.67 that year. But then, boom, the bubble burst, and by 2002, we are looking at an average of just $1,539.73. Talk about a wild ride. But here's where it gets really interesting. Despite that massive drop, NASDAQ has shown incredible resilience over the long term. By 2020, it had bounced back to an average closing price of $10,201.51. And guess what? As of January 17, 2025, the NASDAQ composite is sitting pretty at 19,630.20. That's some serious growth. Now, let's hop across the border and check out the TSX in Canada. I've seen studying this fascinating chart from S&P Global, and it's like a history lesson in Canadian finance. The TSX has its own fair share of its ups and downs too. Remember Black Monday in 1987? The TSX felt that hit. But then came the 1990s and things started looking up. In fact, on March 1st, 1990, the TSX made history by listing the world's first ETF. How cool is that? But wait, there's more. According to Y charts, the S&P TSX Composite Index has been on a pretty impressive run lately. As of January 24, 2025, it's sitting at 25,483.99. That's a 24.60% increase over the past year. Now, you might be wondering, how do these two stack up against each other? Well, let's break it down. On the long-term growth, both indexes have shown impressive long-term growth, but NASDAQ has been the clear winner here. According to macro trends, NASDAQ has seen some years with annual growth over 40%. In regards to volatility, both markets have had their volatile moments. The TSX took a big hit during 2008 financial crisis, but so did NASDAQ. In fact, NASDAQ saw a 40.54 drop in 2008. In the recent performance, both markets have been doing well recently. NASDAQ saw a 28.64 increase in 2024, while the TSX saw a 21.65% increase in the same year according to Y charts. Let's be sector focused. This is where we see a big difference. NASDAQ is known as its tech-heavy listings, while the TSX is more focused on the natural resources and financials. But there's something really interesting. I found on Statista, they've got this chart showing the annual performance of the S&P TSX Composite Index from 2005 to 2023. In 2023, the index closed at 20,958.44 points. That's pretty solid performance. Now I know what you are thinking. This all sounds wow. But what does it mean for me as an investor? Well, that's the million-dollar question, isn't it? Or should I say the million-loony question for our Canadian friends? The key takeaway here is diversification, both NASDAQ and the TSX offer unique opportunities. NASDAQ gives you access to those big tech companies that have been driving a lot of market growth. On the other hand, the TSX offers exposure to Canadian strong natural resources sector. Remember, past performance doesn't guarantee future results, but understanding these historical trends can help you make more informed investment decisions. And there you have it, a whirlwind tour through the historical performance of NASDAQ and the TSX, for the highs of the dot-com boom to the lows of the 2008 financial crisis, and everything in between. These markets have seen it all, and they are still going strong. So keep exploring, keep learning, and who knows, maybe you will be the one ringing the opening bell at one of these exchanges someday. Until next time, stay curious, stay informed, and happy investing.